Cool. Get this pulled up here. Nice. What up? What up? Hmm. Give it a few minutes and we'll start this up. Start clearing out some mess. Yeah, I'm not talking yet. Just chilling. I guess let me know if there's audio now. You should be able to hear me though. Guess it's always good to be safe. Cool. Yeah, before we get started, I guess yeah, we'll double check. Hit me with one or something if you can hear me. Really anything. Confirm. Oh, okay, bet. Then yeah, we good to go. Make sure recording. Okay. So nothing too long, too crazy here this afternoon. Just want to run through a recap like we usually do on Sundays, but since we had the bank holiday, figured we'd wait till the market closes and then take a look at what we can kind of expect the remainder of the week. This. So for those that have been around, we've just wanted to see continued buy-side delivery. I'm going to go to this daily quickly. Ever since we cleared the sell side, right, these equal lows, returned into this daily inefficiency, blasted up and through the high, creating this breaker, right, creating this institutional order flow. and really just continuing to expand, we want to see buy side targets met. So first this high, these highs, right? This swing point. We've engineered now a new daily swing point just underneath. Right? So if we zoom out, this high here. So we have a set of daily relative equal highs. This is just another daily high that we have kind of targeted. But our real objective is this swing point as well. We'd like to see that continued upwards expansion. We spoke about last week how this run lower to clear out this low. We would not expect to see right price continue any lower. We understand this is more just a run on stops. So we were looking for that short-term low in a bullish environment. Runs on sell side are just that, right? They're going to be runs on sell side to pick up stops before we continue in that given direction. Order flow here is obviously established bullish, right? We're continuing to reach for buy side. So we just want to see that continue. No need to try to go against the trend. We just like to see this buy side objective. The fact that we now have these equal highs just underneath, right? Relative equal highs anyway, just underneath another set of daily highs is really nice to see because we can gravitate into that. This high should act as a magnet paired with this high. Really strong area of liquidity. Eventually price should reach up into that, and that's what we would want to see. Going the 4 hour quickly. So we'll just look at last Monday, right? Really just continuing to deliver higher. So we reach into, right? This is that daily fair value gap. We'll label that quickly. So we've reached into this daily fair value gap last week. Look at that delivery, right into the low of it. So we've hit that low perfectly. We then close above the daily fair value gap. Once we see that, we understand this becomes balanced. We wouldn't want to see much lower than the daily fair value gap's consequent encroachment. So we have created now this fair value gap as we leave. This is on a 1 hour chart. But now as we're leaving that consequent encroachment, we leave that fair value gap perfectly aligned. So as we retrade into that, right, OTE entry, consequent encroachment holds us, and then we get that quick acceleration through the first set of highs that we're looking for. We have now got that little hesitation inside of this premium inefficiency. So on a higher time frame, as we first come into that, we can expect some hesitation. Right? Even if we are expecting higher prices, it would make sense to stall a little bit after this huge extended move. Right? Expansions will lead to this small short-term consolidation. We bang into consequent encroachment a few times, finally get above it. We did actually trade down and through. Right? So last week during the high impact news events, we did end up getting down and through that just to clear out kind of the short-term lows that were created. But because this was a high impact news event, CPI is rather aggressive. And the fact that we never actually cleared this low, right? This would become the protected low in this case, once we break through this fair value gap. We're still fine trusting this as an inversion. And honestly, that's what I would want to see going forward the rest of this week. Is that if we're going to start attacking highs, so notice how we've created, right, these equal highs here. And now this high as well. So I'll just label the highest high, call it relative equal highs. We have this equal high. We have this 1 hour fair value gap that we've yet to actually close above. So this is now the premium that we're being stuck basically at, right? We've gotten the consequent encroachment. We've actually gotten above it with a wick. No candle closure. That's important, however, and still never cleared that buy side. So now in this thing, right, still wicking, no candle closure, wick. So it's just purely wicks. We want to see price actually close above that, which should then let us expand through these other buy side objectives we have. To get there though, right, what are we kind of expecting? Well, I'm looking back at this 1 hour fair value gap. Right, I'm looking at this low now. This low is cleared sell side liquidity. We have now engineered buy side liquidity. So if we're going to clear this sell side, I would want to see this buy side be attacked. As we get back above this original 1 hour fair value gap, right? Same thing. Notice that we left behind a new discount. So after clearing this sell side liquidity, right? Even more important, we're making this discount through an old fair value gap. So we create a bearish fair value gap as we're closing underneath and clearing this liquidity. If we see that be traded through, we can now expect that to become a bullish inversion. So now as we trade up and through that here with this candle, while at the same time engineering an actual bullish fair value gap, this is a real strong area of support. And that's why we see, right, these candle bodies holding. So for me, I would like to see if that area can't continue to hold us. We've engineered lots of equal lows because obviously it's a holiday, right? We're consolidating. So we, on an hourly sense, we do have equal lows sitting here. That's sell side. I'd be okay with running that sell side first before continuing higher. Obviously, to pick up stops, it'd be nice to pick up stops before we actually continue with the upwards expansion. We'll just continue to work on down to the time frames. And you still see how these areas overlap. Once I actually do this now, you'll see the other key areas. So I kind of want to move some of this so it's not so jumbled. We're going to move this one. Really want to just keep the lower hourly fair value gap. Let's go back to that. And then we have this inversion. It's actually, let's go with that. So really we're playing off this inversion. The 1 hour bullish is inside the inversion, but I'm fine leaving the actual inversion, giving us a little more space. Right, and that's because these lows here are aligning with that. So I'd like to see this sell side objective. Obviously, longer time frame, right? We want to see buy side hit. So we have buy side objective targets. But in a consolidation like this, if we want to run stops first, right, to kind of engineer that opposing liquidity, it would make sense to clear these equal lows, return one more time into this inversion, even though we've already hit the low here. So not really return any lower than consequent encroachment. And pretty conveniently, notice there's a new week opening gap aligned with that consequent encroachment. So now as we start kind of building this whole narrative, I definitely wouldn't really want to see much lower than that new week opening gap this week if we want to attack right this high. These sets of relative equal highs anyways, and then return, now that we're on a 15, into this untapped inefficiency here. So as we work through the time frames, we're starting to see these inefficiencies a little bit better, right, giving us something to look for. This is that 1 hour inversion. We've already cleared sell side here, ran that sell side. We've gotten above a new day opening gap and the 830, but it is a Monday, right, and it's a bank holiday, so could kind of want to ignore this price action per se. I want to see what we do tomorrow. But really waiting on tomorrow's price action. And as we mentioned, if we want to make a move lower, so we'll say it's the Judas swing for this week, right? If we want to clear stops before actually attacking buy side, my eye immediately goes to this sell side. Of course, if we open and just kind of start expanding and don't show any interest of wanting to attack this low, we're fine looking for longs because buy side is obviously our objective. So we're okay hopping in longs. But in the chance the price wants to make a move lower first, we understand why, and we won't be thrown off sides, right, until we really start breaking through these levels. Like for me, we would need to close back. Let's go to the hourly. We would need to break really through consequent encroachment, candle close underneath, even more importantly, close underneath the hourly fair value gap for me to resume bearishness and start looking for lower prices. As of now, everything for me would still be towards higher prices. So first the wick. As you saw in the 15, there's that inefficiency that we could target. Don't really want to go too much lower just because for today, right, it's not going to look like anything important. Just choppiness. I guess we could look at like Friday's price action if we needed to, but yeah, honestly, really no need to get any lower than the 15, maybe even the 5 today. We'll keep it on the higher time frames, right? Use the lower time frames for entry, but as far as outlook, we just want to have these higher time frame objectives ready. Wanted to ask, how long did it take you to backtest a single day? So you're asking me, if you're saying how long would it take me to just kind of run through the day and mark it up as a backtest? I mean, maybe half an hour to an hour. Nothing too, I guess, extreme. If that is your question anyways, in that sense. Yeah, I think we'll go ahead and wrap it up if we don't have any other questions. As we said, a little shorter. Just wanted to get on here and kind of share our thoughts going forward, right? What took place last week. I'm really seeing that as kind of a manipulation. So we had that news take place on Thursday, right? So prior to that, we had moved up into that premium engineering high of the week on Thursday. Thursday cleared lots of sell side liquidity. I'm seeing this as kind of like wiping fresh, right? Anyone that was long gets wiped clean. And now we can once again make a bullish move towards these highs. Ugly delivery, right? Admittingly. Let me hide kind of everything here so it's a little easier to see. So of course, ugly delivery per se, but as I look at this chart, I see more jagged lines lower, right? So we've cleared this sell side already, jagged line. Engineer these lows, we've cleared that, right? This low stairs kind of protected, same with these, which is why I wouldn't mind running these. But this high, right, still kind of left in place. So that is what my attention is drawn to. And I would like to see us reach up into that. I don't really use right specific model. So I'm at the point now in kind of my trading and understanding where it's trading whatever PD arrays are currently in price. And that's what I've mentioned with my members before. To where we can use the models as confluence, right? So if I see a breaker, if we see the YouTube model, mitigation block, order blocks, right? We understand that we can use those as confluence. But it's really more relying on liquidity, what's been attacked, right? Which PD arrays are currently being used, and where are we looking to go? My keyboard is, what is my keyboard? It is the Corsair. You're gonna make me look it up. Hold up. I'll go to my, let's see, Corsair. Oh, there it is. It's the Corsair K100 RGB mechanical keyboard. Full sized with the macro buttons. Random question. May I ask why you're asking that? I'm just curious. I don't think anyone's ever asked me that before. I see that the vast majority of futures ICT traders trade NQ. Yeah, for me, right, I like NQ. It just moves a little bit, we'll say, more precise in my opinion. So with my trading style, I like to keep my stops under 3 handles, which oftentimes in NQ, right, you're not going to get just because it moves quicker, right? Larger ranges. So for me, I like to keep ES, be a little more precise with it. Obviously, people have success with NQ, right? I have people in the mentorship that trade NQ solely and do well. So it's just personal preference. And I always have NQ pulled up, right? Because I look at it every day along ES. But for some reason, I just lean towards executing on ES. When I first started, I was someone that traded NQ solely just because it did have larger ranges. I felt like as if I needed to catch larger moves to be profitable because I wasn't as consistent in my understanding or executions. Whereas now that I do understand what I'm looking for, I'm more consistent in it. I'd rather have that consistent, repeatable, precise setups than trying to catch kind of larger ranges. Just more of my personal trading style. How do you view the importance of backtesting and refining your model or lack of set model? So I guess it's different in the fact, right? What do you mean exactly by backtesting? For me, when I say I used to backtest, because I would often say I backtested every day, it's more a form of journaling. So let's take like, right, Friday, or let's do Thursday CPI, for example. Let's say we wanted to backtest, right, Thursday's CPI session and really what took place for that day. What I would be doing is marking up potential setups that I could have taken even if I did not. Right, so in that sense, it's that pseudo experience, and I think that in itself is very important to your understanding, right, of what model you're trying to learn and trade. So if that's what you mean by backtesting, I definitely would, I guess, recommend that. Of course, if you're kind of using like an FX replay, that's still good. Admittedly, I'm not someone that necessarily does that anymore. I'm sure if it was widely available as I was coming up, it's something I would have used. But now that I don't necessarily do backtesting like that as much, it's something that I kind of, like I mentioned, just don't use as much. Either way, backtesting is essential to understanding what you're looking for. Because if you don't have right example after example after example of what you're expecting to see in price, you won't be able to forecast it before it happens. What model? As I just mentioned earlier, right? I don't necessarily have one certain model. If I had to give you my, let's say, bread and butter, right? The model that I would look for high probability, that would be the 2020 YouTube model, right? Running 15 or an hourly liquidity. ideally with an inefficiency paired with it, right? And then you pair that. So kind of honestly like this, right? Running liquidity, returning into an inefficiency, leaving that fair value gap. That would be the model. That would be my most, I'll say, highly probable. If you've been someone that's in the streams, or if you would like to look at the streams, right? I often like taking, I guess for those of you that would talk in market maker buy models, right? The second stage of either a accumulation or redistribution. So oftentimes after price is already confirmed a given direction, I'll enter on, right, the redistribution of that, we'll say. I'm trying to find an example, I guess. Like Thursday. We could use Thursday with the short that we shared there. Right, so as where a lot of people might want to short, let's say like just fair value gaps, potentially like this. Right, I'm someone that always likes to kind of wait for that confirmation that an area like this will hold us. So instead of going short here, which is valid, right, short here, stop above swing highs, I like to wait for now, because price is fractal, of course, the setups within the premiums. So now within this, we get the YouTube setup, right? Into that premium, short-term high cleared. More importantly, notice how we're breaking through a new week opening gap with the short-term low, which is why then we're comfortable shorting in that time. Because we've confirmed we're going to hold an area like this to target liquidity. And more importantly, we're already in the middle of a move. So I guess you could add to my model as well, right? I like trading when a move is already established. I'm not necessarily one that catches like tops or bottoms. Much more inside of the range, right? Middle of the range to the external range liquidity type of trader. Yeah, I think that'll be all for today. As we mentioned, a little shorter. Really just wanted to see how this YouTube stuff is, testing it out. Not too bad, not too bad. Quick little recap, just on the higher time frames, right? We'll stay there. Obviously, buy side macro, buy side, we want to see buy side be met. We're coming off of really an extended buy model, right? So sell side of the curve here as we're going lower to now the buy side of the curve, right? And we want to see this consolidation here, those highs be ran out. So really we're at that second stage of that accumulation. Would look for these highs here to be blasted up and through, ideally. If we need to run stops first, however, we understand we have relative equal lows here, as well as an inefficiency that price can run into, find support, and still continue higher. But that's really what we'd be looking for. This here would be the lowest we'd want to see price go, this 1 hour fair value gap. So if we get much lower than this 1 hour, more than likely we want to return for the lows, and then we would have to readjust kind of our bias and start targeting sell side instead of the buy side objectives. For those of you that are members, we will have a live stream tomorrow morning, right, to get the week started out. For those that aren't, our first stream will be probably Thursday. We'll see, either Wednesday or Thursday for the live stream of the week. Of course, right, if you're always interested, the link in my bio for the private streams. Not necessarily needed, just there if you want that extra understanding. We'll add this to the mix as well. So this 1 hour bearish fair value gap, right, as we kind of look through price in here, do we see any inefficiencies? So in this leg high to low, the only inefficiency created was this, which was repriced into here immediately, and this, which we've now gotten above, which is why we're seeing this as that inversion. We shouldn't really get below that. But now in all this jumbled mess, right, the last really inefficiency that was created, this 1 hour here. So we have this one that was created, we're holding bullishly, this one bearishly. If we want to see higher prices, we want to see premiums give way. So we want to see first consequent encroachment. That's the first indication that price will want to continue through the objective. So we would look for that. And at this point, right, we would look for highs. At what point do you change your bias? Oh, yep, as Sharky had said, right, if we get underneath this 1 hour here, because this run lower has repriced fully into it, and now we've closed back above it. Notice as we leave it, we're leaving it with the fair value gap. So this fair value gap here should be balanced. This should be a protected low if we want to attack right? Buy side liquidity here. If that's the case, price should have no reason to even really return below consequent encroachment. Like getting under consequent encroachment, that will be an early warning to start looking for this low to be targeted. So if we have something where we do want to run lower first, right? Wick these lows, hold the 1 hour on a 1 hour sense, and then attack highs. Don't get lost on lower time frames, right? So we need to wait. Like if we have 5-minute candles closing in here, that's fine. Because we're using the 1 hour fair value gap, we rely on the 1 hour candlesticks themselves. I'm actually going to label this here as well, just in case we want to run from where we are. Like that. So just label them the 1 hour fair value gap, having something to look at. Or the volume imbalance, excuse me. As we go forward. Cool. Yeah, we will meet up tomorrow morning and get the week started. Hopefully we get some nice price action. Obviously, we've been a little choppy, right? Start of the year, we're in the accumulation phase. We don't expect too much craziness. We've been moving pretty aggressively, higher and higher, right? So consolidation is expected. But at the end of the day, we still have buy-side objectives. So even if it's high resistance, we still want to see price reach higher. We'll leave it at that. Hope you guys have a good Monday, right? Celebrate MLK Day. Respect to my brother. And yeah, we'll talk when we talk again. Take care, everybody. Have a good day. See you guys.